there, good afternoon. You've logged into Closing Trades. You're catching us live from the SBI Live studio. You're at ET now. I am Snehisha, and with me as always is Shrishti Sharma. And we also have Kunal Bothra in the studios to try and get you a lowdown of the kind of trading session we've seen. Absolutely flat on the markets right now. In fact, we've slipped into the red territory once again, very nominally. So not much happening over there. But yes, we have slipped below 25,200, that also very nominally. So we have been dilly-dallying around that level. About an hour or so ago, you did see a spike coming in the market, and that has once again receded. So that's the take on Nifty. But take a look at Nifty Bank. What a stellar outperformance today, outperforming the entire breadth of the market, a 0.5% uptick, and it's managed to hold on to most of those gains that it saw over the course of the trading day today. So that is looking good. A couple of names are doing very well, and it's IndusInd Bank on the back of their CFO announcement coming in that Post has gotten okay from the RBI. So that is looking good for IndusInd Bank, about 3% higher. The Adani Group stocks continue to do well. Adani Enterprises up 2.5%. Once again, from the banking space, you have Axis Bank that's also doing very well, as is the case with SBI, Bajaj Finance from NBFCs, Kotak Bank. So it's largely names like Metal, Select Autos and banks that are doing very good right now. On the flip side, some pressure on Trent today, almost 2.5% cut on that counter, followed by SBI Life, HUL, Tech Mahindra, Ultratech, as well as HDFC Life. So this is what the breadth of the market is looking like right now. Just want to see what the broader end is doing. Mid cap is lower by 0.3%, and Nifty small cap index also 0.4% cut, underperforming the market, as was the case with the small cap space yesterday. Sectorally, let's take a look at what is happening right now. You did have autos that were charging from the front, but that rally has fizzled out because you do have PSU banks now that are taking the charge, up 1.2%, with Canara Bank, SBI, Union Bank, Bank of Baroda, all of them doing very well, followed by metals, auto and bank, with pharma, a tinge of green coming in on pharma. But on the flip side, all the other sectors are in the red, with deep cuts on FMCG, realty, IT, energy. So yeah, these are some of the winners and losers on the street today. Shrishti, anything else standing out to you on a stock specific front?
Indeed, the move in the IT space, a bit of a recovery from the day's lowest point is what we are getting to see. Other than that, it's the Adani group of counters that are doing very well. And of course, the banks are definitely leading it from the front, not just the public sector banks, even the private sector banks are doing very good as we speak right now. But what to make of the markets and what your strategy be like? Let's try and understand that. And let me welcome Kunal Bothra, who is already with us, and Shivangi Sarda is also here with us in the show. A very good afternoon to both of you, and thank you so much for your time. And Kunal, your take on the markets. You have been bullish on the markets, and you also suggested that it's going to be quite a range-bound markets, but what do you make of this recovery intraday?
Yeah, it's a very good recovery. So, in the morning we were saying 25,050 on the spot levels should be a support, and the index comes closer to that point. It could be a very good contrast zone for index traders. I think we made a low of 25,080 or 75 on the Nifty spot. So we were almost closer to that kind of a major support point. And the fact that this 500-point rally for the 500-point range for the index from 25,000 to 25,500, if you see a bounce back from a lower end of the range for the index, that tells you that that's a zone where the demand has come back again for the indices. Now, the more interesting part was mid-session when the index was at 25,075, 80 levels on the spot. The put call ratio had come back to deep oversold territories for the Nifty. I think at one point we were almost at 0.5, 0.51 for the Nifty PCR. So that was also one of the indicators that indicated that the markets are going to an extreme oversold territory, and we could be in for a decent bounce. Now, after today's intraday recovery, I believe that, and with the strength coming back into the banking index, I believe that we could probably be looking out for a further up move for the Nifty over the near term. So now I think from 25,050 as a initiation point, we would now be looking at 25,400 to 25,500 for the Nifty over the very near term as a target.
Okay, so that's the take coming in on the market setup from Kunal on the key levels to watch out for. We'll also interact with Shivangi Sarda, who's joined us on the show, but just on the other side of this very short break. We'll be right back. Welcome back to Closing Trades right here on ET. Now you're catching us
us live from SBI Live Studios, and we are in conversation with our market experts. In Shivangi, I wanted to come to you for your take on metals pack specifically, because in the morning we were just chatting about the note coming in from Nomura, where they were highlighting the fact that the production in China is actually getting a hit, which could be beneficial for some of these Indian steel companies, and along with that, it's the whole steel safeguard duty that is definitely boosting the numbers and is expected to do well in the times ahead. But Shivangi is saying that, what's your take on the technical front? Because I see JSW Steel, Tata Steel, they have once again picked that momentum.
Very good afternoon, Shishti and Snehi. Thank you for having me. So we've seen that the metal pack has kind of witnessed a good amount of open interest addition here. In fact, one of the preferred pick for this afternoon, I had JSW Steel in mind. This stock particularly has broken out of its consolidation of the last 11 trading sessions, and we can see that even on the longer time frame, it has been making a higher top, higher bottom on the weekly basis. So looking quite positive with sustainable move from the last few weeks. Now, of course, the volumes in the last 3 trading sessions have been remarkably higher than the average, which stand out for this stock. And overall, there is a little bit of a sector tailwind as well. So this would be a buy from my side with a target of 1190 levels and a support of 1125. So.
Okay, that's the take coming in on JSW Steel. Kunal, while we're talking about the sectors that are doing well right now, we've touched upon metal, we've spoken about banks earlier, but what is your take on some of the PSU banks in particular? The case in point being Canara, SBI, they're both looking very good, and I believe they're your picks for today as well. Yeah?
In fact, Canara was something I recommended in the morning also with a target of 124, because I was anticipating that, so we did a relative strength study that which are the sectors which have been doing very well. PSU banks apparently was one of the best performing sector. Within the sectors, when we did a relative strength study amongst the stocks, apparently Canara Bank, came out to be one of the better performing names, on closing yesterday. So that was purely an indication that, if the markets have to get back into recovery, then PSU banking stocks would lead the charge. In that sense, and then within the PSU banking names, there could be a stronger case that names like Canara Bank or SBI could probably tend to outperform. So, the bet was on both of these stocks. Apparently, both of these stocks have done reasonably well, and I would still believe that there should be much more headroom for many of these PSU banking names to perform very well. From a short-term play, I would still continue to be bullish on Canara Bank with a near-term target of 125, and stop loss could now be trailed higher to 119 for traders who are looking at a fresh buy at current levels. And for SBI, I would actually look at a psychological break of that 900 mark coming for the stock in the near term. So targets of 900 for SBI, stop loss could be kept closer to 850.
All right, those are the picks coming in from Kunal. But Shivangi, what about you? Which are your stock ideas?
So from the stock idea space, on my radar is also one of the PSU name banking stock, which has witnessed good amount of short covering move in today's trading session. And talking about SPI, and we've seen that this stock has, consolidated at the higher base from the last 4 trading sessions. And, whatever call writers were there, they have been seeing unwinding their position. So this caused a bit of a trigger and rally in today's session. Of course, the longer term structure looks quite positive. It has come out of the consolidative band from the last 5 months, and specifically Bank Nifty gaining momentum and now starting to outperform after series of underperformance. This one would be one to lead the entire pack. So now I'm looking at SPI with the next potential target of around 900 levels, and on an immediate basis, of course, and a stop loss of around about 860 zone.
So that's SBI looking good to Shivangi right now. That was also one of Kunal's picks. So SBI and Canara Bank both looking good. But let's focus from PSUs and talk about private banks. And IndusInd Bank at the top Nifty gainer right now, because in the latest when it comes to this bank's accounting lapse investigation, ex-deputy CEO Arun Khurana was quizzed today. Earlier this week, ex-CFO Gobind Jain was also grilled, and ex-CEO Sumant Katpalia has been summoned for questioning tomorrow as well. Anurag Shah is here with more details.
In IndusInd Bank derivative accounting lapses case today, Mumbai EOW questioned former Deputy CEO of IndusInd Bank, Arun Khurana, and he has given his replies to EOW, and he is again summoned for Saturday. Prior to Arun Khurana, CFO of IndusInd Bank, Govind Jain, also grilled by EOW, and he claimed that he only flagged the issue internally. Former MD and CEO of IndusInd Bank, Sumant Kaptalia, is also summoned by EOW for tomorrow. So EOW is investigating that derivative accounting issue was started in year 2015, but it came out in 2024 only. So EOW is investigating on this front after the application by bank's management. So all the aspects are investigated by EOW in this 1900 crore probe of derivative accounting losses, which also reported by IndusInd Bank, and after that we have seen a change in management also, and market cap of IndusInd Bank also crashed after this derivative accounting lapses. So now EOW is investigating on the application submitted by bank's management.
All right, thank you so much. Thank you so much, Anurag, for getting us all those details. But with this, let me also welcome Ajay Bagga on the show right now. Mr. Bagga, hi, good afternoon, and great to be speaking with you. This whole GST optimism that is seen to be playing around in the markets as well. Firstly, help us understand, how do you catch hold of the sentiment? Because not just equity markets, across the asset classes, we are seeing good moves.
Yeah, it is a global move as well. And in India, post this GST cut yesterday, we have seen a very strong auto sales. The e-commerce platforms are reporting pretty good offtake. Used car online platforms are reporting about 400% better volumes yesterday. So 2 or 3 things bunched up. One, large orders or large ticket items were not being purchased, especially in the north, because of the Pitru Paksh. And as that ended, yesterday we have seen huge orders coming in. Now, we will have to wait a month or so to see the actual on-the-ground impact. But the first indicators are pretty good, Srishti.
Okay, so Mr. Bagga, that is your take coming in, but also talk to us about the kind of run-up that we're seeing across sectors. And even if you don't look at this GST angle right now, even despite that, so much sector churning is happening right now. You have autos that are doing well today. Yet again, PSU banks are at the forefront. When it comes to so much volatility, so much sector churning, how does one navigate this right now, and also the overall market structure? Because we are seeing some subduedness in the market back again.
Yeah, see, overall, we're not out of the woods. The markets will get a leg up when earnings show a very sustained kind of an up move. So those fundamentals have to catch up. The GST has been a big sentimental boost. Hopefully, it will translate into fundamentals also getting boosted, but the markets discounted a lot of that. Again, sectors like defense, which are down today, I said last time on your program that you see a few weeks of very frothy moves, and then there is some kind of a sell-off that comes in when the valuations become too high. So we are seeing that in certain sectors. IT, of course, is being buffeted by multiple headwinds, and we had frankly thought that the last quarter could see some traction coming back to IT. Now with this H1B, again, it's not that big an issue in terms of direct impact. The fear is, will US follow through on this with some offshoring taxes, what they're talking about in the Hire Act? I don't think that will come through because that will hurt the US economy itself. But markets will be a little wary in terms of taking positions in IT till there is some clarity on that. What could change the sentiment completely would be if there is a minor trade deal with the US post Mr. Goyal's visit. If something gets announced there, I am a little pessimistic. I'm not, definitely a BTA is not coming this year. Even in terms of getting some relief, we will have to give a lot. And I don't know if the government will want to do that before the Bihar elections. So I'm not very optimistic about this visit, but let's see. Anything that comes in the markets will cheer that. The good news is 12 months we have been below the levels of last September, and normally we have exceeded the median and as well as the average time spent below the all-time highs in a downside. So markets have paid the price in terms of time-wise also, and they are primed. But what is needed clearly is a fundamental shift in earnings. Moment those green shoots start emerging, you could see momentum coming back to the markets.
A lot of moving parts there for the markets. We'll talk more on that, but before that, it's time now to slip into a very short break. Don't go anywhere. We'll be right back.
Hi there, welcome back to Closing Trades. Let's get you the top story of the hour. And the government is mulling to relax norms on renewable energy projects financing in order to boost the sector. Sources tell ET Now that government officials met banks and NBFCs to chart out the plan for green bonds. My colleague Prakash is here with more exclusive details. Prakash.
That's an important development coming in as we are learning from our sources that the government has held a meeting on renewable energy financing, a very significant development coming in. In fact, MNRE and DFS officials met with banks, NBFCs and other financial institutions, but they're not in favor of launching tax-free green bonds to meet funding requirement. In fact, sources are indicating that the government officials are of the opinion that the banks and NBFCs can meet rupees 2 lakh crore funding requirement by 2030 to achieve 500 gigawatt renewable energy target, a very significant development coming in. However, lending terms for renewable energy projects likely to be relaxed to expedite funding requirement. Along with that, definition of renewable energy projects may be amended as well to ensure easier financing. Along with that, sources also tell us that the government will hold next round of meetings with the states and project developers on power purchase agreements. In fact, 40 gigawatt of renewable energy projects are still without power purchase agreements, which is a major concern for the industry at this point of time. And therefore, government is making all out efforts to address industry's concern on securing sufficient power purchase agreements.
All right, thank you so much, Prakash, for getting us all those details. But Mr. Bagga, just wanted to touch upon some of the sectors that you just flagged off before we hit the break. What's the defense pack? Because a lot of this momentum is seen to be coming back on select defense and the railway counters. What do you make out of it? Do you believe that the valuations are too stretched, or the valuations are factoring in all that is built in terms of the order book, the growth and the market size growth opportunities? How do you see the defense pack playing?
You give both the answers. I would just add to that, if you have a 3 to 5 year money, by all means go into defense. If you are trying to play momentum, then right now it's on a sell basis and it will come back again. So the story is multi-decades strong. The story is import substitution plus the way defense is rising across the world. So the defense expenditure is rising across the world. Trump's policies partly to do with it, and partly the Israel, Middle East, as well as the Ukraine, Russia dragging on. So there is a militarization that's happening around the world. India can become a supplier of choice in this kind of a move. So it's a multi-decade move, but there will be these sharp falls as well, because the markets have become very, very good at making any good news lead to a lot of frothiness in the stock. So if you are trading, you have to recognize that. So short term, wait for the momentum to come back and then take positions. But on a 3-5 year basis, you'll do very well, even at these starting points. Normally, people say very high PEs will be difficult to make money. But the kind of order books and the kind of visibility that is there, plus the kind of problems India is facing in the neighborhood, these expenditures will keep on happening. And then once the export windows become more robust, you will see these becoming suppliers of choice. So it's a good sector to bet on, but for the longer term.
So that's the take coming in on defense. Shivangi, what about you? Which stocks are looking attractive from the defense pack? Because we've seen a lot of momentum in these stocks once again, especially the shipbuilding end of it. What's your take on the defense space? Which stocks are looking good? Shivangi, you'll have to unmute yourself, please.
Yes. So from the defense space, we've seen a good amount of action from the last 2 weeks, and we've seen that these stocks have actually gained a good amount of momentum and holding well at the higher levels. On my radar is HAL, which has consolidated at the higher base, and we've seen that buying can be seen at any small declines. Today itself, 4750 was an important level that it bounced back from. So good amount of retracement is also seen at these stocks. So this becomes a very good level to enter after the cool off that we've seen. So looking at HAL for the next target of 5,000 levels, and it would be little positional, and with a support of 4,700 levels.
Right, that's the take coming in on select defense counters. Let's watch out for that. But what's interesting to see, or rather a bit surprising, is actually Trent, because that stock is one of the top losers on Nifty 50. And given the whole consumption theme that has been playing around, more income in the hands of the people, how they are going to save, this retailer is getting hammered with respect to the stock price movement. Kunal, but what is your take specifically on the charts? Because the reason I ask this, because in the last 7-8 months or so, I see this, the stock has already taken support at that 4,900 odd level, and this time as well seem to be retesting that. But this time, do you believe that the stock can correct even more?
It can correct more, but there should be a bounce back before it goes into a further sell-off. Because today at 4,900 levels, the RSIs and many of the other momentum indicators, they are extremely oversold. Look at it this way also, the markets have gone through a process of a bounce. So in that sense, you'll see many of the stocks which are on the verge of a breakdown or a retest of the previous supports, even they could get a fillip or a bounce before they move into the next leg of correction for themselves. So I believe that yes, the charts are weak. The more interesting part for Trent is the lack of participation the stock had seen right throughout this last 1,000 to 1,500 point rally for the Nifty, and that I believe is the most differentiating nature for the stock price, because in the previous trends for the stock, when the markets used to move up higher, Trent was among the best performers. So I think in that sense, yes, the stock is going through its own phase of correction, but purely on the short-term charts, I was looking at the intraday indicators also. I think at 4,880, 4,900 mark seems to be that the indicators are oversold, so the stock could be due for a short-term bounce before it goes into a further leg of correction.
That's the take on Trent on the charts. But Mr. Baga, what are you making of the entire retail space? Because of late we've been seeing value retail doing much bigger than big box retail. Do you think that is a trend that could sustain, especially after these GST cuts?
No, I think you will see the premium retail also coming back. Two trends are there. One, the urban demand has not picked up. Rural demand has come back a lot. So the premier end of the retail are more focused on the urban, semi-urban, where the demand has been lagging. What we are hoping is that with these GST cuts, a lot of textiles, for example, are getting a 7 to 10% boost. A lot of the durables, of course, are getting a boost. Plus, the purchasing power is increasing. Say a toothpaste is now 13% less taxed. Maybe 10 to 12% of that gets passed back. So a lot of these goods coming down will leave more money on the table, and you will see that getting spent in retail. So I would say retail is well primed to play the India consumption story. The urban demand revival is coming, and next year, of course, with the pay commission giving government servants a big boost, that is going to get accelerated even more. But even this year, with the income tax cuts in the budget and now the GST cuts, good monsoon, rates have gone down, so EMIs have gone down. What has not helped is wages have not kept pace with profitability. So companies have retained more of what they have earned instead of passing it on to employees. That's at a very broad brush economy-wide level, we have seen wages not keeping pace with the growth in earnings. So that will happen. That will come once demand goes up overall. You see that it becomes a virtuous circle. Demand gets its own demand, and then there is a shortage of workers to fulfill that demand. Wages start going up. So that cycle has to come. I think in the next 3 to 4 months, we should start seeing that also happening. And there, the premium retail should do well. So overall, well-run companies throw off a lot of cash, not cheap at all. That's the only reason institutional investors at times mark them down. But overall, with the India growth story, India premiumization story, and the way people are moving up the financial segments, these companies will do well.
Right, that's the take coming in on the retail side, where in the value as well as the premium category, how and when are they expected to do better? Mr. Bagga just gave his take. But that's interesting to see that select staples, they are not doing well in today's trading session. Stocks like HUL, Nestle, they are hammered. Select companies which have done well in the past couple of days, like life insurance counters, they are down anywhere between 1 to 2%. And even from the auto packets, Hero MotoCorp, that is seen to be taking a bit of a U-turn. But Shivangi, specifically, if I can have your take on the life insurance counters, because SBI Life and SBI Life and even HDFC Life, they were the top movers on Nifty 50 a couple of days back, but today the top losers. What do you make of such movement?
Well, of course, we've seen that the life insurance related pack has seen a bit of a beating down in today's session, and we've seen that despite the move that it attempted in the previous couple of weeks, it wasn't backed by good amount of volumes. So overall, buying was quite shallow in these stocks if we look at the past 2 weeks data. So, recommending a wait and watch over here in these space stocks. But of course, the momentum and focus would be more on the banking stocks, which have, gained good amount of volumes right now.
So not life insurance, but the banking counters are giving more confidence at this point in time. But Kunal, before we wrap up, your take on the OMC basket as well, because of late, no significant movement when it comes to the crude oil prices internationally, which is like directly or indirectly linked to the stock price movement back home. But HPCL and BPCL, they are doing very well. Your take on the technical front?
Yeah, in fact, the entire basket is doing very well, Srishti. So yes, and very quietly, I think these stocks have started to show signs of an outperformance. PPCL, I think, has come back towards a multi-week high, if not, I think, a month, 1 month high in terms of prices. HPCL and IOC are also on the verge of a breakout on their individual charts in terms of the swing resistances. So, which means that we are looking at a point where markets are, indicative that many of the PSU names and the ones which had robust chart structures, these stocks are making a strong comeback. And with the comeback of PSUs and specifically the oil marketing companies, I would actually believe that we could now be at a cusp of a major trending breakout for many of these stocks. So I don't see this as a few days of up move which could just fizzle out very quickly. But I think if in case these stocks say drop down by a couple of percentage points, I actually expect that that could be a very good buying opportunity for a higher target. For BPCL, for example, specifically, I would look at say 350 to 360 as a near-term target, specifically over the next 2 to 3 weeks.
Indeed, that's the take coming in on OMCs. And yes, quietly is the word, because no significant movement on Brent crude, no brokerage report, and no noise as such, but the stocks are moving higher. But with this, Mr. Bagga, Kunal, as well as Shivangi, thank you so much for taking the time out and speaking with us. Pleasure speaking with you all. But with this, now let me hand over to Snehi, who is here to tell us how did the markets pan out in today's trading session. Snehi.
Well, yeah, Shrishti, let's take a look at the kind of tumultuous move that Nifty has had today. Only a net 33-point impact coming in on the spot basis, but we know how the market took a dip, close to breaching even below that 25,000 mark, but we've recovered beautifully from there. Still, we are closing in the negative territory. Nifty Bank has been the real outperformer today, a 0.5% uptick coming in. Good move coming in from names like IndusInd Bank, Axis, Bajaj Finance, SBI. All of them have done very well. The small cap and the mid cap space were also under pressure. The small cap space was bucking the trend and in fact was lower and underperformed the entire breadth of the market. So from the Nifty 50 gainers, you had names like JSW Steel, Maruti Suzuki, Adani Enterprises, Kotak Bank, other than the ones that we spoke about earlier. But on the losing side, you had Trend, Tech Mahindra, SBI Life, Ultratech, HUL, Nestle, HDFC Life. These were some of your top losers. So sectorally, it was the day of PSU banks followed by metal, auto and bank. On the flip side, big cuts coming in on Nifty FMCG, realty, IT, energy and pharma that also slipped towards the red, in the red towards closing. So it's actually names like Canara Bank, SBI, Bank of Baroda, Union Bank, Bank of India that did well from the PSU pack. But from the FMCG pack, Britannia, HUL, Nestle, Marico, Dabur, all seeing cuts anywhere between 1.5% and 2%. So this was the staples pack that was under pressure today. Lots of stock-specific action, but this is how we are shutting shop for the day, 25,182. So sub that 25,200 mark for the Nifty. Let's see what today's trade holds for us tomorrow. But with that, it's a wrap on this edition of Closing Trades. Thanks so much for tuning in.